Odinge.
Yeah.
Okay, yeah. Looking at gold. Natandikira ku weekly kwingamba, that's where actually the highest price was.
Yes.
Yeah, so I had to mark the highest. It was a weekly highest. Gold, the highest was here.
Okay.
So that's the weekly order block, which marked the highest price of gold. So what we saw yesterday, okay, coming to 4 hour.
Not daily.
Okay, I just skipped daily, coming to 4 hour. Okay, let me go to daily, fine. What we saw yesterday. Do you see that price came back? It made the RTO to the weekly order block.
Yes.
It made the RTO to the weekly order block to do what?
To come back.
To grab liquidity.
Yes.
From from that hold high. That hold high is the weekly high.
Okay.
So that's the RTO it made. You see the RTO?
Yes.
So this was the weekly order block, actually, what you see.
Oh, that is the reason why it did not even break the order block.
Yes, it just wanted to grab liquidity lying within the weekly high. The swing high, the hold high. That's the weekly high, which we saw on that level. So coming back to 4 hours, let me come to 4 hours. This.
Okay.
Okay, let me just come to 1 hour. We take it from 1 hour. Fine.
Yes.
So do you see 1 hour?
Yes, I see 1 hour.
Okay, you see 1 hour.
Yes.
Okay, let me just minimize. I just want to mark a line marking the weekly high. I just want to delete this order block. So this is the weekly high, the white line, and I'm gonna delete the weekly order block so that I can come back to 1 hour. We see exactly. This is the weekly high. You see the weekly high that price only wanted to grab liquidity.
Yes, yes, yes.
So let me just mark it so that we can see. Those are liquidity pool zones.
Okay.
Yeah. In price action, you can just call them, those are pivot points, the turning points of the market.
The premium and the discount zones.
Exactly. So this was the premium zone of gold.
Yes.
It was the highest price of gold reached. It was the premium, the weekly high, where it grabbed liquidity. Okay. Are you still following?
100%.
So what do we have on 1 hour? Because we just want to look for the order block on 1 hour, which was formed on the weekly high.
Yes.
And this was the order block.
Yeah, the previous candle before the yes, the previous candle before the it's always the opposite candle.
Yes, the last bullish candle before the drop.
Yes.
So that is it, right?
Yes.
Let me just change the color to blue. So you see it, this is 1 hour order block.
Yes.
Okay, it's fine. This is the order block which created actually the drop.
Yes.
Yes, and we saw a drop after price reached that zone, the weekly high, we saw a drop. So this is the drop we saw, which happened last night.
Yes.
So I'm marking the level of the drop. That was the drop, the TP.
Yes. Where yesterday you are like you are trading the reversal. That was the reversal.
Yes, I was trading the reversal. This is the reverse I was talking about.
Okay.
So what happened? What happened in most cases? You have to wait if you want to sell. For my, I sold aggressively.
Okay.
But the principles of selling, you have to wait for the price to return.
To return to the order block.
Exactly, to make a RTO to the order block.
Or to get more liquidity.
And this return,
and
we
more
saw
orders.
it during the Asian.
Okay.
So that's why.
Which acted as a mitigation.
Exactly, that's a mitigation. That's why I have to write return to order block. It's the reason I have to. I wrote this. It made a return to order block. So you see this high, the most recent high, which was formed.
Yes. Yes.
It never took out the previous high.
The previous high.
So what is the possibility of this block to be?
Okay, the possibility of that block is to come back down to the neckline where it originated from.
Okay, it's gonna actually the only possibility, yeah, is for price to drop, right?
Yes.
Right from the order block, it created, and this order block, this is the order block. Do you see this order block? It's a hidden order block. If you come to 30 minutes, you can see it.
Okay.
Okay, let me see 30 minutes. Do you see this?
Yes. Yes.
So this is possibly a mitigation block on 30 minutes.
Yes.
On 1 hour is hidden, you can't see it. It's here. It's a hidden mitigation block. So what price did? Price made a RTO. And when it made the RTO, there was another order block which was formed.
Okay. Yes.
You see?
Yes.
So we're supposed to sell right at this order block.
Okay.
Yeah, RTO at this order block. We're supposed to place sales because we're expecting price to drop further.
Okay.
Breaking the mitigation block. It's a mitigation block because the current high never took out the previous high.
The previous high.
If the current high managed to take out the previous high, it was gonna be a breaker block.
Okay, breakout structure.
Okay, no, I'm talking about the block.
Okay.
So I'm repeating, this is a mitigation block because
that is a mitigation block because it did never took out the previous high.
Exactly, which is this one.
Yes.
Yes. So on 30 minutes, you can see
we had
this is the order block, which created the mitigation block. This is the order block. Let me show you with the arrow. This is the order block which created this mitigation block because it forced price to buy more further slightly, but it never took out the previous higher high.
Yes.
So my sale was here.
Okay.
And if my sale was here, this order block on 1 hour, it had to be refined to 15 minutes.
Yeah.
So my sale was here, the last bullish candle.
Oh, yes, I see you now.
On the line, when I refined this order block on 1 hour, sell entry was here on that white line.
Yes.
And stop loss was above the order block.
Okay. Yes.
So what we expecting now? Tell me something. we're expecting a drop, right?
Yes.
And to which zones? Because
okay, when we have to first look at the point of interest first.
Yeah, exactly. We have to look at order blocks lying within the lower lows.
Yes.
And this is the most recent order block lying within the lower low.
Yes.
We have a couple of them here. Order blocks lying within the lower lows. There are many. So I'll be marking 50% of this.
Okay.
Yeah, because I'm going to show you something about 50% of the order block, how you mark 50% of the order block. So now,
Okay.
after having noticed that this is a mitigation block, so the institutions are willing to bring price back to the most recent low.
Okay.
And there should be areas of interest. There should be order blocks lying within.
Okay.
But before, remember here they bought. Let me show you the reason why. Do you see here that they bought?
Yes.
They
were
bought
fetching
to do
more
what?
orders.
Give me the reason why they bought.
They bought to fetch more orders, and that is liquidity, to grab more liquidity.
Okay, around the previous what?
Around the previous order block.
Yes. Again, and also they bought to induce more buyers to fall into a buy.
Okay.
And another thing, also they bought in order to stop out people's stop loss.
Oh. Yeah. I'm getting you now.
Yes, so this is the real movement of, this is the current position of the institutions.
Okay.
They are still in the buy, but still they won't care to bring price down. The reason being, they won't care to bring price down to sell, breaking the mitigation block. They will be holding a loss here. Once price sell, they will be holding a loss here.
Okay.
Because they are in a buy, they didn't close this buy. You see?
Oh, yes.
They didn't close this buy. Now, see, they are forcing price to come back, knowing that themselves they will be holding a loss. Do you know the reason? Do you know the reason why?
No.
They don't want to give a chance to retail traders.
Oh.
Who are in a buy?
I get you.
Who are in a buy to come out.
Okay.
So that's why they have to force price to come down here. They will be in a loss. What happens after price hits this zone? What will happen?
They are forced to go back.
Do you know why? The reason why? Do you know the reason why they will be forced to go back, to mitigate back to the mitigation block?
Refilling their losses, collecting.
Exactly. They will be coming back here in order to close their loss, because they entered here at break even. Since they entered the buy here and they will be running a loss in a sell, now they will be returning, mitigating back to the mitigation block to return to close their positions, their buy positions, because they are running a loss at break even, exactly at this level where they bought. You can see exactly price will come, will mitigate back to this level.
Oh wow, I see.
And another reason why they will also come back here, now they will start now to fill in orders now.
Oh, and kicking out sellers.
Exactly. They will add more contracts here, sell contracts. Do you know the buyers will be already crying because already they were induced initially into a fake buy?
Yes.
And also the sellers will be crying here because still they were left hanging. since the return price.
Okay.
So the best way to make an entry is to wait for price to break and come back to the mitigation block. So the best choice is to sell here, to wait patiently.
Okay.
You wait patiently for them to drop the price. You wait again for them to mitigate back to the mitigation block. Then you sell together with them. This is the real sell at the mitigation block, where they put their sell contracts.
Oh, now
I've
seen something. I remember it's about 3 weeks back. There is a term we used. It's all about FG or something like that. What was that term?
The fair value gap.
Okay, yes.
Okay, what's a fair value gap? Okay, fair value gap. Actually, you can literally call it the normal gap. You can call it the normal gap, the one you see in Asian, the one you see in, okay, I have an example here, because fair value gaps is between candlesticks.
Okay.
Yes, a gap between candlesticks, whereby it's not filled. Candlesticks are associated with what we call the fair value gaps. It's a gap between candlesticks, but it's literally a small gap.
Yes.
For example, let me show you one. So do you see?
Yes. Yes, yes.
Do you see that it's not filled? This is a fair value gap, you can see. Whereby the wicks didn't touch each other, didn't touch the other candlestick. The wick, when the wick doesn't touch the other candlestick,
that space is called the fair value gap.
Yes, this is the space fair value gap. That's why price came and filled it here. You see?
Okay.
Before it bought, you can see.
Now I understand.
You understand? Let me look for another fair value gap here, and I see if I can get, and I can get one. Here, it's all filled. It's all filled. I just saw only this one. Fair value gap, fair value gap. So that's what we call a fair value gap.
Okay.
And you can still find it along the order blocks.
Oh.
Yes, yes. So now we're still talking about the mitigation block. We're expecting price to break below, right?
Yes.
Once price breaks below, it's gonna be targeting the area of interest.
Area of the nearest order block.
Yes. Let's see. This is the area of interest. Yeah. So this is the area of interest. Let's see. So this is where our first take profit should be.
Okay.
But in case if price goes upside,
our stop loss has to be above the order block.
No, let's say in case price goes upside and doesn't fall, it means price has violated the order block.
Oh.
Yes, that's a violation of the order block. So that's how it's termed. When it doesn't respect this order block, when this order block doesn't hold price, doesn't force price to sell, and price goes above and breaks, it means there's a violation of the order block.
Okay.
So meaning we shall be having another order block.
Yes.
Formed upside as it returns to the previous order block. But for this case, I'm hoping that this order block is really holding price, and it's gonna be forcing this price to sell.
Okay.
Yes. So for that case, I'll be holding my cell towards this zone until this
area
zone.
of it.
Yes.
Okay. Okay,
Yes.
I get you now.
Yes, but still, London is open now. But still, I'm expecting after price break, and you know what they always do?
No.
When they are breaking the mitigation block, the coach. Okay, let me even write the coach because this is break of structure.
Yes.
Change of character. Break of structure, change of character.
Yes.
So when price breaks below, it creates what? A coach, a change of character.
Okay.
That's when now this mitigation block gets to be validated. After a coach. You see a coach?
Change of character. A change of character normally. Okay. A change of character. I've seen a change of character where it is. It's almost next to the mitigation block.
Change of character, yeah. It's just
the price.
Here. Change of character is here. It's here.
Yes.
You see this line?
Yes.
If price manages to break through this line, it will be called change of character. It will validate the mitigation block. It will be valid. And it will validate the reversal. You know now the price has reversed.
Okay, that's why I saw you indicating that now the price has broke the change of character. That means it has to continue. It is still valid.
Yes. For now, we haven't got any valid reversal because the mitigation block hasn't been broken.
Yes.
But once the mitigation block gets broken,
yes,
you see, with this arrow, it's gonna create what we call a break of structure or change of character.
Yes.
That will give us a validation of a reversal, a confirmation of a reversal. That's why in most cases, we have to wait price to come back to get back to that block to sell.
Okay, okay.
Yes. But you understand?
Yes.
In
terms of connecting dots in connecting.
You have to look at the price origin first of all to understand the whole scenario.
Yes.
Price origin was here, was coming, it was buying yesterday. You can see.
Yes. Yes, it was buying. Then it formed. Then it made a reversal, forming an order block up.
Yes, this order block. Yes.
Yes, forming an order block. Now we have to wait for the price to mitigate, return to the order block. When it had to mitigate, we have to see it coming down, breaking the order block, creating what we call a change of character.
That's it. And when is the right time to take your sell?
Well, the right time is when it reaches to the point of interest and comes back to collect more contracts on.
Yes.
On mitigation block.
Yes.
And again resells.
Yes, that's where we now sell. That's the safest zone to sell, to wait and sell together with them.
Okay.
Because when they sell,
yeah,
they are gonna break the previous level they mitigated from.
Okay.
Yes. They have to break through this previous mitigation level where they mitigated back to the mitigation block. When they're selling, they have to come back.
Oh.
So they will keep coming back. They will keep coming back. They will keep coming back to the mitigation block. And so now it's always good to be waiting for the mitigation block to place sales.
Another thing I've understood is that when it goes back to mitigate and it breaks the order block, like upside, that means it has violated the order block.
Exactly. Then it makes another break of structure upside, which means we shall be changing the what? The character. It will be bullish. Even the market structure will be bullish.
Change of character upside is here.
Yeah, for now, the market structure is still bearish. But if it violates the order block, the market structure is gonna change from bearish to bullish.
Okay.
And we shall also account, we shall also see change of character. It will be above here, the previous order block. It will be our change of character. So we still bearish.
Yes.
We're just waiting for price to drop. If
now
it can possibly drop.
Now, where you had to put that white line where you had to put your cells.
Yes.
Get up to the area of interest.
Yeah, this is the sell and area of interest here, ne?
Yes.
Yeah.
But once it breaks the change of character, then you're safe.
I'll be safe. If it breaks this, change of character, I'll be safe. And it will be confirmed.
Now, my question is,
it will be confirmed a reversal.
My question is, really, in a normal way or a layman's understanding, how did you really had to look at hidden order block?
Hidden order blocks are the order block which you cannot see on higher time frames. For example, let me go to 4 hour. 4 hour, what do you see?
Okay.
4 hour, you can't even see the mitigation block. It's hidden.
Okay, 4 hour, I'm seeing the order block and I'm not seeing anything.
Yes, that's where they are hidden. We can see only the 4 hour order block, the green candle. The big green candle is what we see.
Are we still together?
Yes, yes. Hello? Hello? Kanegi?
I'm losing you. Yes, I'm getting you now.
Okay, on 4 hour, we only see the order block here, the green big candle.
Yes.
But everything is hidden. So the mitigation order block, the mitigation block is hidden. So to be able to see those hidden order blocks, you refine to the much smaller time frames. That's where you can see the those order blocks. That's why we call them hidden order blocks, because sometimes on higher time frames, you cannot mark them, you can't see them.
Okay.
I was trading Bitcoin, fine. Bitcoin had a hidden order block on 4 hour.
Okay.
And this is the one, you see? But when I go to 1 hour, this is it. You see?
Oh, wow. Yes, I've seen it.
Yeah, this is the order block, the last bearish candle, you see?
Yes.
But on 4 hour is hidden. That's why I called it hidden order block when I marked it on 4 hour.
Okay.
Yes, hidden order block.
That means to be specific, you have to be keen. You first look at 4 hour and 1 hour.
Exactly. So I've been buying Bitcoin from here, from Monday, on the hidden order block. And you could see, you see the coach.
Yes.
And this was a breaker block is here. It was a breaker. Because, do you know why it was a breaker?
Because it had to change the character. It had to create another, it's creating another new high.
It made, it created another lower low here. It took out the previous low here, Brad.
Yes.
This is the most recent low. The previous low, it was taken out to confirm a breaker. So this is a breaker. I have to write here a breaker. If I have to write a breaker.
Okay.
If I have to go to 4 hours, I need to construct it to 1 hour. This is a break.
Okay. Yes.
This was a break.
According to the audios you sent me, actually the videos of the structure, it only becomes a breaker when the body is crossed with the body, not a wig.
No, you're confusing yourself. A breaker is confirmed when a previous law, for example, is being taken out. We're talking about Bitcoin now.
Yes.
You see, there was a previous law.
Yes.
But again, we add another law.
Okay.
So it's the opposite in the bullish. It's the same thing we've been looking at gold. This is a mitigation block.
Oh.
It's the opposite. Yes. Don't confuse yourself. It's the opposite. But this is it. Okay, fine. It's a breaker because the previous law, this one.
Yes.
This law. You see the previous law?
Yes. Yes.
Was taken
out.
Was taken out by the most recent law.
Karen.
And price went up, creating a breaker.
Oh.
This confirms a breaker.
Yes, now I get you.
Let me go to USDJPY, I think. Do you see USDJPY?
Yes.
This was the previous law, right?
Yes.
Price went up. Price bought.
Yes.
Let me just mark with arrows to show you. Price bought. You see?
Yes.
But when it bought again, price was
formed another order block.
It formed another law.
Yes.
But this law never took out the previous law.
Yes. Yes.
So this is what we call, which order block is this? If we can say, we can call it. Because this recent law never took out the previous law. What's the name of this order block?
I think it's a hidden.
It's a mitigation block, bruh. It's a mitigation block. It's an order block, but it's a mitigation block. Because the current law never took out the previous law.
Wama ngategedde.
It's the opposite of the breaker. If the current law like this came like this, it took out the previous law. It was gonna form what? A breaker.
A breaker.
If it was supposed to be like this.
Yes.
If price has to take out the previous law and comes up, this was gonna be a breaker. But now, according to what I see, price never took out the previous what?
The previous law.
So it's a mitigation block.
Okay.
For gold,
the same applies up.
For gold, it's a mitigation block. You can see for gold. This is the recent high. It never took out the previous high. So it's a mitigation block. Let me go to Bitcoin again. This is a what? Which block is this?
That is a mitigation block.
Okay, let's go to NASDAQ. Which block is this? Because this is a change of character. Change of character.
That is a change of character.
Yes. Okay, let me mark the order block. I just want you to tell me which block is that. So we're gonna mark 50% of this order block.
Okay.
So which block is this?
So now, according to what you have been explaining.
we have the most recent law. Let me mark the label and see. So this is the most recent law, the previous law. You see the previous law?
Yes. But when the current law did not take out
exactly
the previous law.
This is the current law now. Yes.
Making it a mitigation block.
This is a mitigation block, but it's hidden. We can only go to smaller time frame to see it.
Bruh.
So this is the mitigation block. You see the mitigation block is hidden on 4 hours. We having it on 1 hour. Now this is the coach. Change of character.
Change of character, yes.
Yes. Man. This is the coach. Once Nasdaq breaks here, then it will be a nice buy. So we have to buy from there. You see the coach?
Yes.
Yeah, once it breaks here. Now this is a mitigation block. You can see the most recent law and the previous law. That's it. This is the mitigation block. MB. Mitigation block, it's MB.
Yes.
Yes. So and our area of interest is gonna be targeted on the next order block.
Okay.
Our area of interest. So this is the block we have, the next order block. You can see it.
Yes.
So we have to buy Nasdaq till there. Then price has to mitigate back. To the mitigation block. You see?
For more orders.
Yes. After that, it will shoot. It can probably be tomorrow or the last shooting, but today we're buying to sell. This will be New York, I think. Yes. So that's Nasdaq.
Okay.
Bitcoin, you saw it. Gold, you saw it. USDJPY.
Okay, let me explain.
Okay.
Let me explain from
which
Bitcoin.
Pair? Bitcoin. Okay. All right.
Okay, leave it there.
On 1 hour.
Okay, now when you first leave it on 4 hours.
Okay.
Then you give me a credit before I go to 1 hour.
All right.
Now, when the initiated original move came,
yes,
I created a lower low.
Yes.
It went back. It did not break, causing a change of character. Again, it came down, creating another new lower low.
Okay.
It went back again. It did not break the previous structure. It came back creating, but it did not take out the previous lower, making it a mitigation block.
Yes, that's right.
Since it is a hidden order block, we got 1 hour. We got 1 hour. Now it shows it clear that it did not break the previous lower low.
Yeah.
And it broke the previous create change of character.
That's it. Whereby price was initiated, we saw a lot of momentum. Yes.
That means the price has to go to the nearest order block,
which is here. You see?
Which is here.
Let me mark it nicely on 1 hour. Okay, let me mark it nicely. Let me go to 4 hour. You see, price had to come here. Okay,
yes.
This is a 4 hour. The previous, it was the TP.
Yes.
On 1 hour, you can see that there was a retracement. There was a consolidation. It was a return.
Yes.
So,
making another order block here.
Basing on that, I think price will just use this. Will just return to this order block. We just use
another
this order
change of
block.
Character.
Yes, another change of character. Yes.
Yes.
It will make a return on this. It won't come back to this. It won't come back to this.
Yes.
Because if it manages to buy, it will only return here.
Or the reason why the market is returning or making a retracement is to kick out more buyers, to kick out to the stop loss of buyers. And to collect more orders since their institution.
Exactly.
Grab liquidity.
Exactly. So do you know that the institutions were in a loss?
Yes.
They were from here, the institutions were bought here. Let me show you where they bought. Initially, before they bought here.
Okay.
Inducing buyers to fall for the trap of buying.
Okay.
And grabbing liquidity, but they've been holding their losses. This was all the loss they were holding in the sale.
Oh, through the discount area.
Yes, they were holding, till towards the discount. They're still holding a loss. Now they have to make sure they return price to back to where they entered their buy, to close their buy. This was their buy zone at the order block. You see where, where they induced buyers. Yes, they have to push price here so that they can close positions, so that they can now sell. The true sale should be here now. Once they have returned, they will be selling now. Crazy, they will be selling. Yes.
Market structure. Market structure.
Yes. So this buy, they're also holding a loss in a buy. This in a sale, this buy is reducing their loss, and they have to make sure that they return, because their entry was here. Let me show you their entry. When they induced buyers to buy, that's what they wanted. Entry was here. You see the entry?
Yes.
You see this big candlestick? This candlestick, this one, let me show you. This one, you see this long candlestick?
Yes.
They wanted to induce buyers, so they were all their position initially was in a buy, but still they push price down here, holding a loss.
Okay.
So this buy is just an intention for them to close their what? Their loss, their positions at break even, but they will start selling from here exactly when they have closed their losses. Because they're always having enough money. They don't care. They all want just to trap you in the wrong direction of the trade. That's how they will be making money.
The retail traders.
Yes. So USDJPY, you could see what's happening.
Change of character. It's just making a retracement.
Yes, already it made a return to order block, as you could see. This was the RTO, because there was order block here.
Yes.
This is 1 hour. Let me make it 1 hour order block. You see this last red candle?
Yes.
So it was a return. Okay, now a return to this order block, so that they can.
Talking about,
yes.
You were talking about marking the 50% of the order block.
Okay, now let me explain what's the 50% of order block.
Yes.
Why do we have to mark the 50% of the order block?
Okay.
50% of the order block, fine. I'm gonna show you the example on 4-hour Bitcoin.
Okay.
So the order block we have on 4 hours is this one. Looking at the previous price before it's sold.
Yes.
So marking wherever you get the biggest order block, because order block is always a candle or a pin bar. It depends. You don't have to. You don't have to use that all biggest order block. I cannot, there's no way I can use this big order block. It's so big. We only use 50% of the order block. How do you measure the 50% of the order block? You can measure it with a Fibonacci. High to down or top to up. You mark the 50% range. It should be in the middle, like here.
Okay, yes.
You see?
Yes.
You mark the range of 50%. That's where you expect price. If it comes back, it's gonna come back to 50%. It's not gonna come back to 100%. That's why all these, they were coming back to 50%. You can see.
Yes.
Yes. Wherever you get the biggest order block, let me look for another one. Yes, this is USD JPY.
Yes.
So you see this one, the bearish order block.
Yes.
On 1 hour, it was this.
Yes.
It looked to be big, so I had to mark 50% for an entry. In the middle is 50%. That's where I took the entry here.
Oh.
Let me go to 4 hour just to show you something. You see this order block?
Yes.
Let me show you. Let me just mark it.
There's no way you can carry. Me, I've been carrying the whole thing. Hello.
Okay, this is the order block as you see on 4 hour, the one I showed you. Ne?
Yes.
You see the one USD JPY 4 hour. You see it?
Yes.
You see the last bearish candle? It's big. This order block is big. You only mark 50%, bruh. That's why in the middle, that's why you expect price to retrace and take a buy.
Oh, you don't take the whole.
Yes. Okay, another example. This is a 50% order block. You see the order block here?
Yeah.
Where can we mark the 50% now?
Okay, the 50% you see above the.
In the middle of this order block, the red card is the order block. It's in the middle. It's already marked.
Okay, I've seen it.
Yes. So for cases whereby, in instances whereby you encounter big order blocks like this one, Bitcoin 4 hour, you have to mark 50%. Price will always choose that 50%. We will not choose the top, all of the order block.
Okay.
Yes, so that's the 50% marking of the order block if you want to make an entry.
Oh.
Just like you see here. Let me show you on gold.
That one was.
This is the order block we're marking.
Yes.
So 50% is here in the middle. You see price came right at 50%.
Oh, we first put a Fibonacci, I see.
Okay, my Fibonacci can't. I have to set it, but let me put it.
You just put it there. Yeah, we shall.
It's not set nice. It's not set. Yeah, it's on the candle.
Wow.
Okay, 50% is in the middle here. That's why it's not set.
Yes.
I need to set it nice. It's in the middle here, between 38 and 61. Yes, that's where even the price came and respected 50% of the order block. In case you encounter big order blocks like this one, the last bullish candle is the order block. It's big, so I marked 50%. Yes.
Nkutegedde kati nze nali njikubawo kyonna n'ekitwaliramu. Now you find as if it is in the range.
Yes, so you have to mark the possible entry should be at 50% where price is expected to turn.
Okay.
You have to be keen with it. Yeah.
Musajja gwe kanoonye sente nzigyeyo.
That's ICT.
Smart money concept.
Yeah, so I hope now you understood everything. There's no question.
For today, let me make more research on questions and I fire you with some questions.
Yeah, but on God, we're holding a sale. Let me just see how it will play out during the day. Yeah, okay, yeah, we're ending the session, but I hope maybe you understood whatever we went through.
It's only 4 hours to make it 1 hour of the session.
Yeah.
Jonaje chiri akatale kalimba nze nfanako.
Akatale keeko maani tewali kirala kisingaawo.
Jonaje chiri nfanako. Ogenda ku wagoni. Ngane ndi eri omuwalabu ampalabanya nedda taata.
Muganda wange nenga ke katale kutegeera ICT kutegeera concept. Nze ntekayo analysis mu group sikuba nti njagala kweraga nti mmanyi simanyi ne kulaba muntu ampabulamu wenkoze ensobi n'abasinga batya.
Omusajja yamaze amaanyi ye Tafi omusajja ali mu kuzimba ennyumba Jester.
Tafi azimba